Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to start off by answering a few frequently asked questions that I've been getting of late. Then we're going to talk a little bit about some Bitcoin news, crypto news in general, because things are heating up, things are getting pretty wild out there. So we're going to go through a few sort of major crypto things that we need to discuss. Then, hopefully by the time I've done recording that, the CPI print should be out. So it's currently forecast at around 4.1%. I think we got to come in below that. So we'll see how that goes, but by the time I release this video, that data will be out, so I'll talk about that. And of course, we'll see how that affects the probability of seeing a pause at tomorrow's rate hike announcement. So strap in, today's should be a good one. So the first question I want to answer is melt up versus blow off top. Are they the same thing? Are they different? And to be honest, I incorrectly use the term melt up a lot. I use these two as if they are interchangeable, but they are actually distinctly different. A melt up is a sustained, unrelenting uptrend that slowly but surely grinds its way up with very few shallow pullbacks that occur. So this would be a melt up. An example of that would be, here's the S&P 500. You can see from around April of 2020, we had what I would consider a melt up, a slow and sustained uptrend where pullbacks were shallow and few and far between. We just trended straight up for many, many months. So how is that different to a blow off top? Well, a blow off top is a trend that has three phases. It has a first incline phase, then it sets a second inclining phase, which is steeper in angle of attack than the first. And then in the third and final portion of a blow off top, what we see is near vertical price trajectory that ends in almost vertical price euphoria. This is the difference between a melt up and a blow up top. So a melt up is, like I said, sustained uptrend with very few opportunities to add on dips, versus a blow off top, which is a parabolic curve and advance just like this. And an example of that would be Bitcoin back in 2017, as you can see here. So this would be an example of a blow off top. We have our lead in phase, right? This is step one. Then we set a second phase, which is steeper in angle of attack, which would be step two. And then finally, we go near vertical on the way up, as you can see, ending in straight up vertical price euphoria. So that's the difference between a melt up and a blow off top. Although I do personally use the term melt up a lot when I guess I should be using blow off top, but hopefully you can forgive me for that. The second question I'm getting asked a lot lately is, why is Bitcoin not following stocks? And does that mean that Bitcoin is decoupling? Is it decoupled completely? Will stocks go on and leave Bitcoin behind? And the answer to this, I believe, is quite simple. So if I start with my Bitcoin chart, I want to draw your eyes here, okay? We had this move down, we had a counter trend bounce into the August high. So this high here is August of last year, as you can see. We then went on to set what would probably have been the final low of the bear market in the middle of October, if it wasn't for the FTX collapse that then led us to have that final capitulation, setting the ultimate bear market low in early November. So keep those dates in mind: August high, October low, and then the FTX plunge early November. Now, if I hop over to the stock market, here is the August high for the stock market. This is the S&P 500, right? Then we come down, we make that October low, and there's no FTX collapse that affects this. So from the October low, we've been in an uptrend. Now, if you'll notice where the price is today, we have only just gotten into this August high neighborhood. For the NASDAQ, ignore my green fractal for now, we'll get to that a bit later. But again, you can see these dates, right? This blue squiggle here is the August high. We come down and make that final low in October. FTX blows up and we get the black swan that impacts Bitcoin early November. And since then, we've been in an uptrend. Now you can see the NASDAQ is leading, and by quite a significant portion. As you can see, the price is all the way up here. So the NASDAQ has smashed through that August high, but it's taken all the way until the end of May for us to clear that high. And as I said, for the S&P 500, we are just into that level as we speak. So with all of that in mind, if you look at what Bitcoin did, Bitcoin, here's the August high, remember, it completely smashed through that all the way back in March. And not only did it smash through that, it then went on to set a near 25% increase above its August high. And keep in mind, low to high for Bitcoin is around 100% gain. So going back to these questions, why is Bitcoin not following stocks? I don't believe that Bitcoin is not following stocks. What I believe is Bitcoin got there first. Bitcoin got there first. Now it's undergoing a consolidation, a tightening, a volatility compression period, which means it's squeezing before its next move up. And whilst Bitcoin is squeezing and taking a breather after a massive 100% rally that took just 4 months to complete, the likes of the S&P 500, as you can see here, are slowly playing catch up. So I do think we've got a little bit more time, a little bit more upside ahead of us, something like what the Nasdaq has shown us here. So I think we've got maybe till the end of the week for bullish action, and then I think we're going to get this big sort of shakeout correction, right? Then I think we're going to get this shakeout correction. We're going to get that drop into that cycle low for the S&P 500, but I've been talking about ever since the last cycle low. And then I think finally it's time to put in the final portion of this blow off top. And of course, when that happens, I believe we see Bitcoin go on and do Bitcoin things. So to recap, why is Bitcoin not following stocks? I think because it led on the way there. It's taking a breather, and whilst it takes a breather, the stock market is catching it up. I do not believe it's decoupled at this moment in time, but I do, however, believe later in life there will be a complete decoupling and Bitcoin will function as a safe haven asset, much more similar to gold. But that is just not the world we live in at the moment. Will stocks go on and leave Bitcoin behind? I highly doubt it. So open to anything. Of course, I could be proven wrong on this. And where do we know if I'm wrong? Well, if we come out of this cycle low and we don't go straight up, if we do anything but that, if we, chop around sideways, if we roll over, anything like that, then we'll say Camel was wrong about this. But this is right until it's wrong. And one last thing I'd like to point out, if I go on to logs, so this fractal fits, look at the price action, right? Look at this fit. It doesn't look like it's broken just yet, does it? So this is still in play. We've got to have a little bit more time to get to the end of the month and let that daily cycle pay out. Maybe we'll end up shifting this over ever so slightly so it looks a little bit more like this. But ultimately, this is right until it's wrong. And particularly if this starts to fire up out of the cycle low due at the end of the month, then expect me to continue to trade as if this is the primary base case expectation for Bitcoin. Keep in mind, under the hood, Bitcoin's hash rate has rocketed past 500 exahashes overnight without the slightest piece of news or recognition. The price remains completely unmoved because, of course, it's in that consolidation cycle. But it's really like mining is so competitive at the moment. Everyone seems to think, at least in the mining industry, that this thing's about to go to $100 billion a coin and everyone wants in. That's the way miners are behaving. They are scrambling to get as much hash rate and as much miner dominance as they possibly can at the moment. But the price just doesn't care. The price is not reflecting this. So whenever you have a disconnect like this between the fundamentals and the price, that is where you get the opportunity from. I had a request to go over 3 cannabis related charts, so I'll do that for you. We'll get into the charts at the end. As always, I wanted to point this out as well. Look, Texas is going to become the Silicon Valley of Bitcoin. So Texas is ready. We're seeing Russia is ready as per yesterday's video. We know Hong Kong is ready. Everywhere in the world seems to be ready, apart from in the United States, where the SEC is playing try our best to slow this thing down, but it's not going to work. Okay, the US congressman has filed legislation to fire the chairman of the SEC. So Gary Gensler, his days are likely numbered. And in addition to saying goodbye to Gary Gensler, we also have the Hinman emails being released. So are we going to get to see the full details of these documents? That is to be determined. But believe you me, if these emails come out, it is going to reveal that the SEC is a very corrupt organization. It's also not going to be good for Ethereum, in my opinion, but we'll wait and see what the details say. Here is a timeline for you. Now, I'm not going to go all the way through this, so pause your screen here if you want to go through this and check out the timeline for yourself. And there's another slide here. So again, pause your screen here if you want to go through all of this. We also have the Bank of China issuing 28 million in digital structured notes on the Ethereum blockchain. Okay, so I don't really need to say anything else about that, I don't think. In amongst all of these fear campaigns, in amongst the news headlines that are literally telling you now is the time to quit crypto, in amongst all of these weird lawsuits that we're getting, the exchanges being sued, everything else that's going on, what we're seeing is the Bitcoin illiquid supply. So this is coins that are not available to form part of the trading supply. This is people like me that buy Bitcoin, withdraw it to cold storage, and then leave it there. This is my hodl stack, okay? I'm sure you probably got one as well. So those Bitcoin that you're holding for a longer term and have no intent on transferring to exchanges and enabling them to be used as part of the liquid supply of Bitcoin all contribute to this illiquid supply. So the illiquid supply continues to spike. Let's zoom in on this chart. As you can see, massive 14-day change. People are withdrawing their coins from the likes of Coinbase. People are withdrawing their coins from the likes of Binance. And of course, the higher Bitcoin's illiquid supply goes up in yellow, the less money it actually takes to move the market cap of Bitcoin because there are fewer Bitcoin available for people to buy. All right, we're back. And as you can see here, we've got 4% inflation. So that is below forecast for the year over year headline CPI. Not quite the 3 handle I was hoping for, but still undeniably, US CPI is indeed coming down. You can see month over month headline is right in line with forecast at 0.1%. US core CPI year over year came in slightly hotter than expected, and month over month right around forecast. So overall, the inflation narrative continues to play out. Inflation is still seemingly under control. I just wonder if I refresh this. This has ticked up slightly higher, so just a few percentage points up. We're now just sat under 80%, as you can see, for a pause at tomorrow's rate hike announcement. So are we going to get the pause? Does that mean we could see the markets front run that pause? Does that mean we've got some wiggle room here to the upside as we get later and later into that daily cycle before, of course, the daily cycle low is due around the end of the month? So I would think this is conducive to a little bit more bullish price action for the rest of the week and possibly into early next week before we start to get that rollover into the daily cycle lows. The same is true of the NASDAQ. If you're wondering where I got this fractal from, I think I pulled it from somewhere in this neighborhood or maybe this neighborhood. So I just copy and pasted that and stuck it there. Now, that's not to say this is what's going to happen, but this is kind of what the cycles are telling us. A little bit more upside followed by a pretty significant correction before we can go again. So I think overall, bullish structure should still remain intact. We'll see what goes on. We'll see how the next couple of days play out. Of course, there's going to be a lot of games played, a lot of volatility, a lot of wicks to the up and downside, as there always is during FOMC. The Dow, if it can break out above the top of this blue box, then expect me to go long, but that may well have to come after the end of this month. So we'll see how that goes. The VIX, still compressed, isn't it? So little pop up, but now we've got the CPI out the way. Markets hate uncertainty, and that's one thing that is now certain. We know the CPI, so I would expect this to continue to chop around over the next couple of days and then bleed down lower before then we get the little pop up as the S&P 500 finds its daily cycle low. I'm going to be keeping a close eye on Apple. Again, it's the same sort of story. I want to see this break out and clear the all-time high on a daily closing basis. And I certainly don't want to see us lose these blue and yellow upward sloping support lines. So I'll continue to push this trade all the while those conditions are met. Tesla, I would expect some sort of pullback over the next week perhaps. So maybe we go a little bit higher, pull back, and then we can draw a trend line and buy the breakout and go long again, as I expect Tesla to then go on and do Tesla things. Here's gold. So gold refusing to break down, still not short, still looking to get short if we can lose this upward sloping blue support line. But for now, it just hasn't done it. So I'm going to be keeping my eye on that. I'm going to be keeping a close eye on Apple. Happy to hold and push the rest of the trades. Bitcoin, as you can see, still trading in its range. So I expect this to continue, as I already said earlier in the video. I'm noticing XRP starting to look more and more bullish here. So we'll see what can happen. Is this going to be a buy the rumor, sell the news on the Hinman docs, or is this going to end up producing a crack above this local high back here? If it does, if we get above 58 cents, then I would say full bore bullish look is on for XRP. Ethereum kind of looks heavy to me, so we'll see what can happen here. I will be interested in maybe adding another position back once we get to that daily cycle low at the end of the month for Bitcoin, but in the meantime, not super interested in this. We should probably move this trend line to here, as that seems to be being respected by the market. That's the level the market is clearly paying attention to. Here's the dollar. So we've been talking about this, haven't we? Seeing the CPI come off and the dollar roll over. So there's still some scope for this yellow trend line to hold and us to bounce out of here. But as it stands, the dollar looks heavy, and I would expect this to roll over. The cycles are down for the dollar, so we'll see what can happen here. But believe me, if we get back below this yellow line particularly, then expect risk to come on very, very strongly. Given where the cycles are for the stock market and Bitcoin, kind of makes sense to get a little counter trend bounce into the end of the month before then we roll over. So we'll see how it goes one day at a time. You'll notice the yields think a pause is coming. So does the 2-year, as you can see. TLT still not triggering a recession trade, which would be a breakout above the top of this range. So it hasn't done that yet. So maybe we're going to start to see this slowly wander up here and then break out. That's, of course, to be determined. Oh, I almost forgot, actually. I promised I'd do these 3 weed stocks, didn't I? So let's do those. Starting off with Canopy Growth Corp. So I don't know anything about the underlying fundamentals or any of that. The theory is that there is this wave of global legalization. I'm kind of inclined to say that the green rush has already happened. And I think that kind of already happened back here. If, however, they were to legalize it in, I don't know, the UK, for example, then we will certainly get a repeat of the green rush. We'll get the UK green rush. And I would likely be buying every single green stock that I could possibly get my hands on. Is it worth buying a chart that's down this much? In my experience, just because a chart is down loads doesn't necessarily mean that it has to resolve to the upside, right? Now it can. Maybe this presents massive, massive opportunity to the upside, But also, maybe it's going to zero and the company's going to collapse, right? Many stocks that take on this shape never recover their all-time highs. Now, I'm not saying that won't happen for this stock. I have no idea. But in terms of the chart, how I would personally want to trade this is I would want to see a breakout above 4.5. So if I don't see a breakout above this, for me, this is just absolutely of zero interest to me. That's just my personal take on it. But I would want to see a break above these local highs here for me to even consider getting long. But if it can indeed base, right, if it can do something like this and then break out, then that can certainly be a buy entry from somebody that trades breakouts. Here's Tilray. So again, speaks to the green rush already having happened, in my opinion. Now, the thing I like about this is it is basing. I would assume that Tilray has got quite a lot of work to do as well. So if it can start to trade sideways, right? Sideways is the first thing you want to look for in a bottom. It's got to go sideways. If it just starts to do this and then some big spike up, I mean, where's your entry come from, right? You have no real entry. There's no clean trend line. There's no clean diagonal anywhere, is there really? I mean, you could maybe use that, but I personally wouldn't. I don't like the way that the angles just aren't being respected on this chart. And sometimes charts they don't have to respect the angles, right? It's better to just trade something you've got confidence in. For me personally, I would want to see a break above this. I would want to see not only it not make very new lows from where it is, I'd want to see it sort of range, establish a true base, a true bottom formation, and then break out, similarly to the chart before. And the last one of these is Clever Leaves. So again, it kind of speaks to having already missed the boat, in my opinion. Now, this is starting to go sideways as well, so that's always positive. Let's zoom in a bit. You can see of late, we seem to be putting in a base here. So if this can end up being a floor, and we can draw a box somewhere, maybe like this, right? Or a box or a horizontal trend line, whatever you like. If we can, like I said before, establish a base, right? Start to work our way up, trade around in a range, and then break out. Then similarly to the other two, then we can say, okay, the bottom's in, we're now emerging from a base. So the same principle applies. If this can indeed be a base, if we could indeed encapsulate the lows and the highs, something like this in a range, and then it can break from that range, then this could certainly stand a chance at recovering some higher prices. But I would certainly caution against looking at a stock that's come down 99% from its highs, or whatever the number is, and making the assumption that, well, it's down that much, so it must be a bargain. Okay, there is nothing to say that these stocks won't just go to zero. So nothing necessarily wrong with these stocks, but like I said, wait for a range break. That's how the pros do it. And if, of course, they do break out of the range, then you're looking at major upside in every single one of these events. So I hope that helps. If anyone else wants me to cover any charts in particular, throw them down in the comments or stick them at me at Twitter and I'll get back to you. So we're slowly but surely ticking boxes, aren't we? We're slowly seeing the inflation come down. We will possibly, or likely at least as it stands, get to see a pause tomorrow at the FOMC. And then we should be able to see the markets put in the final extension for this cycle, a pullback into the end of the month. And then I think it's time to attack the all-time highs. So as ever, one day at a time, trade safe out there. I hope you're doing well in life. And in the meantime, take care from me. All the best. Cheers. Bye.